Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Ryan S., Brian H., Paula C., Jake V., and Paul M. On the program today is a returning guest and one that we're pleased to have back with us. Mr. Alex Black is on the program today. Alex is the executive chairman of Rio2 Limited, a Chilean-focused gold project developer that is constructing the Fenix Gold Project in Atacama Region, northern Chile. Under the initial stage of the mine, Fenix is expected to have annual production of about 91,000 ounces of gold over the first 12 years of operations. During this time frame, the mine has the potential for a significant expansion of the production profile. Rio2 is listed on the Toronto Venture Exchange under the symbol RIO, as well as on the US OTC markets under the symbol RIOFF. Alex, great to have you back on the program.
Thanks, Andrew. Thanks for inviting me back.
Well, Alex, it's been a while. I think we chatted early in the year 2024, but now we're coming up on the end of the year. And of course, lots of progress has been made at Rio2, as well as we've seen quite an interesting market this year, to say the least. And it looks like 2025 will be no shortage of fireworks and oddities out there. To get started here, it's always good to get your thoughts on the market, Alex. To get someone of your experience and know-how in the junior markets, to get a view of the markets here, specifically in the junior gold sector. Any thoughts on this year's sentiment, what you've seen so far this year, Alex, how you see things setting up for 2025? And of course, anything you see that might throw a wrench in the spokes impacting the junior sector in the months ahead here.
Yeah, I guess this year it's been interesting. We've had a significant rise in the gold price to almost $2,800. That was good for the sector, but then we ran into the US presidential election, which sort of threw some cold water over all of that. The sort of chatter going around about the role that Bitcoin may play in the strategic reserve for the US dollar, as opposed to gold or any other base for that reserve. I think that threw a bit of cold water on the gold situation. Although it's starting to firm up a bit now. We're at $2,600 today, but it's still been tough for juniors. Our sector is not loved from a share investment perspective, I must say. And it's something that's changed over the last 15, 20 years, very slowly. But, there's obviously been interest in the metal, and the metal's done quite well over that period of time. But from the point of view of junior companies, and I guess junior companies are explorers for the metal and then also potentially producers of the metal, there's not a lot of love. So the markets are tough. You see juniors at the moment raising a few $1 million here and there, just to keep the lights on and to do a little bit of exploration work, but you don't see the recognition, I guess, for a lot of junior companies. Also, on the other side of the equation, there's a lot of junior companies are sitting there with not a lot from the point of view of assets. For an exploration asset to become an economic mine is a tough proposition. Probably less than 5% of junior companies who ever discover a resource of anything see that at some point convert to a mining operation. So that's an issue that the business faces as well, is the success rate. So we've done pretty well this year. Rio2 has done pretty well this year, transforming itself from just a junior resource company to a junior true developer. And I say true developer because there's a lot of companies that have developer in their descriptor, But at the end of the day, a lot of them will never get to that point of developing a mine for various reasons, whether it's economics, whether it's social, whether it's political, whether it's, there are lots of things to prevent a project from becoming a mine. We've been successful in becoming a true developer, and we've raised money in a difficult market. We've commenced construction on our project, which should see us get to first gold production hopefully around the end of next year, which is quite quick. So we're happy, but the market is tough.
Recently, it's been one step forward and a couple steps back, and you're not making definitely forward progress. You might be at the same point or be walking backwards at this point, but there's been a number of different events that have slowed things down, changed the view, distracted people. Some of the global economic fears out there as well that we're seeing, just a number of issues here. But I guess what's good about Rio2 here is you guys are in that transition stage now where a lot of risk has been taken away and that you guys are moving into, there's a lot of comfort in cash flow production. Despite equity markets can be still difficult, you guys are transitioning into a position where there should be some very good sustainability come out of all the work you guys have put in all these years. I guess with that, why don't we jump into Rio2 here and talk a little bit of recent news, Alex. One of the big key items here was the company just completed the final top up on the construction finance package. Talk about that milestone, the folks involved with the financing, and if you can confirm that this carries us hopefully right to sustaining cash flows from operations in the future.
We were on target this year to get our permits in place, which we did in early October, and we always wanted to get our construction permits. In Chile, there's a group of permits that you need to enable you to initiate construction. So we were able to achieve that status in early October, and then we followed up with a debt and equity announcement in respect to financing. On the debt side, it was quite interesting because Wheaton Precious Metals, who already have a gold stream on our project, which was taken down back in 2021, stepped up and offered us a gold prepay facility of $100 million and a cost overrun facility of $20 million to fund a proportion of the construction financing. That, along with $25 million owed to us from the stream, put us in a position where we had, $145 million of new money available to us by way of debt and stream. Then it was really up to us to look at the equity fill for that debt package, and the minimum target was set at about $20 odd million US for us to fill. And we decided to do an overnight marketed deal led by both Raymond James and 8 Capital, who we've worked with pretty well over the last couple of years. The target was to look at 40 million Canadian, which let's say it's 30 million US on a rough basis. Overnight, the book was marketed, and the next day we were nearly 3 times oversubscribed at about 140 million Canadian, which was a pleasant surprise for us. And obviously, we didn't need that much money, but what we decided to do was increase the financing from $40 million to $55 million Canadian. At the end of the day, we also received the over allotment of 15% from the bankers. So it took us up to about 68 million Canadian. That put us in a pretty strong position because, as I said, only 22 million US was required to stopgap the debt component of what was given to us. We've come out of it with about $30 million US more than what we needed. And we decided to do that and take that money from the point of view that we wanted to shore up our balance sheet, and we didn't want to give the market the impression that we could be a company that gets towards the end of their construction period and says, "Oh, we've underestimated the construction capex, or we've had a cost blowout and we need to go back to the market before we produce our first bar of gold. We didn't want to be in that position. So taking more money than what was required and diluting our shareholders by about 20 to 25%. So it wasn't, a highly dilutive equity transaction. We came out of this with a very strong balance sheet. The other thing was that with this interest in our story and the market interest in taking the book up to 140 million Canadian, we had a lot of new institutional investors come into the story. It was almost 48 different institutional investors took up our financing. And so that was a big validation point for us that we had some blue chip funds and some smaller funds that wanted to get involved in our story. So that was a very positive aspect of the financing that we did.
Alex, thank you for that. And I think taking a little bit more capital, contingency money, if you will, and having that taken care of up front makes so much more sense than having to tap the market, as you said. Right as you guys get ready to get finished up, there's some type of a construction issue. Very rarely do these things go 100% perfect. There's always some type of a problem somewhere. And so obviously your team's ability to plan this out as well as possible, have everything secured on lead time schedules, materials, labor, it plays into this. Obviously planning makes a huge impact on the successful outcome, but to be short right before you start with first gold, yeah, that would be certainly a disappointment. So I think this approach is absolutely the way to go. I think it's an approach that you have learned over your career and are making the right decisions here. So I do appreciate that. And that's very important, I think, to point out to anybody out there who has their own company and is looking to bring forward a productive asset. You definitely do not raise capital on the back end if you can avoid it. And we've seen some of this play out in other sectors as well within the junior natural resource sector, not just gold, but other places like uranium as well. Mistakes were made. Let's put it that way very lightly. And with that, also, just on the permitting front, just for some of our newer audience, Alex, who maybe this is the first time hearing from you, just with respect to permits, you guys had announced that you had received all the key sectorial permits granted, enabling construction to start at the site. Just wanted to confirm for the folks who are not familiar with the story, all permits now are in hand and you guys are off and rolling. Is that the case?
Yeah, in Chile, permitting goes on forever. So we'll be permitting, and we are permitting now. We're getting certain permits that will enable us to do things along the way. But there were 4 key permits that enabled us to commence construction, and they are in hand. So that's the key point there. And these other permits and ongoing permitting will continue for the life of the project. That's what I'd like to explain to people. We went through 2 years of hell with the EIA not being approved. We were able to turn around that situation, and now here we have a fully permitted project. So quite a turnaround of events, 180-degree turn, and I've got to say that our team has done an excellent job to get to that point.
That's great. Fully permitted here. You guys are good to go. And now it's just a matter of maintenance and compliance permitting.
Exactly.
Appreciate that. And definitely there's new audience here listening for the first time. So I wanted to make sure that they understood a little bit of the history there. And of course, always refer the audience back to our conversation we had earlier this year, which goes over in great detail some of the issues on the permitting front that were finally corrected.
Yeah. We've obviously gone over this in the past. It's now water under the bridge. We now have a very important project for the Atacama region where we're located. We'll be contributing significantly to employment in the area over the next 12 months, at least from a construction perspective, and then ongoing from a operational perspective. So we're happy that we were able to do that.
We'll get back to that here in a moment, Alex, as we get into the community end of things. But now that construction is commencing at the site, or will be commencing very soon, Of course, there's been lots of pre-work activities as well that you guys have done, pre-construction activities off-site, fabrication, and you guys have done a lot of work really over this kind of dull period of this, getting the permitting finally sorted. But now that we are at this point, give us a update on the schedule as far as next milestones that you think are important here. And then, if you don't mind, just give us a little bit of speculation as to when you would expect commercial production declared.
I think we'll give more public clarity on this in Q1. But having said that, we've always talked about the fact that we think that we're going to be on track to produce our first bar of gold towards the end of next year. Now, will it happen in December or will it happen in January? I'm not sure yet. And that's why we want a little bit of time to get started on construction, to sort of pick up our pace and rhythm from a construction perspective, to understand how we see things playing out over the next 12 months. But that's sort of the rough guidance is end of next year for first gold. So right now, as you correctly said, we have bought all our long lead items. We've fabricated a good component of the processing plant, and now it's an assembly job. But before the assembly starts, there's civil engineering works that has to happen, preparation of the plant foundation, preparation of the leach pad, ponds and plant area, etc. So all that's happening now. So if we were able to see the project from where we're sitting now, we would see trucks running around and civil construction work going on. And mobilising of our two key contractors, the contractor who's going to build our processing plant and the contractor that's doing the civils, is happening or has happened. And that's why we want a couple of months under our belt before we start to come out with official guidance on timing. It'll be quick. It'll be towards the end of next year.
And definitely the schedule here is fairly accelerated at this point, and you've been able, again, once your guys' preparatory activities and planning and off-site fabrication and all those things that you guys have been able to do, long lead time equipment orders, getting everything set up is going to facilitate a pretty fast build comparatively. So I appreciate your thoughts on this.
And a big part of that has been employment as well. I mean, we've had to staff up in Chile. And I think that the latest headcount, we're about 150 people. So that's ramping up, and building up our delivery team on site in Chile is key to it as well. The good thing is we're coming off the completion of construction of Salares Norte, which is a goldfields project 150 kilometres to the north of us in the Atacama region. Salares Norte was put into production, I think, earlier on this year. So there's a lot of people that have come off the build of that project that will be coming on to the build of our project. So it's kind of good. We're in a good spot, good timing from the point of view of availability of personnel, and so the next 12 months should be pretty interesting.
Absolutely. Looking forward to seeing more updates as you guys can clarify some of the activities and get things going here on the ground. Alex, let's assume for a moment that all goes to plan and don't have any other reason not to believe. I do think we are past all of the troublesome areas, and that now that you guys have de-risked this substantially, both on a fully permitted basis, plus also capital, plus contingency. So right now, you guys would be just under 100,000 ounces of gold. I'm sure you'll be able to squeeze and tweak as you guys get things operating steady state there, and maybe there's even some bonus production that comes in once you guys get everything working smoothly. Everything goes according to plan, steady state comes. How soon would you look to start stage two operations? And with that, highlight the potential, well, really the anticipated production profile of an expanded Fenix project to give our audience just a flavor for the upside beyond the stage one plan, how you see you guys would continue to expand and boost the production profile of this project.
Yeah, well, I guess the first part of the answer to that question is that we have to do an expansion study first. And internally, we've done some estimates of timing, costs, and other things. So, but that information is not public and not encapsulated in a technical report. So, we'll kick off a study pretty soon. We've been looking at the various options that we have available to us from a water perspective. The water solution for the expansion of the project will most definitely be desal. There is no opportunity in Chile anymore to extract water from subsurface resources of water. Um, the environmentalists, the governments, etc., have just pushed up against that and pushed mainly a lot of the bigger companies into desal, which they've built their own plants, etc., etc. So we see the solution as being desal. So that's on the critical path is the water. But given that, and given what we understand and the timing, etc., we think that this project will be expandable within a 3 to 5 year period. What we envisage is the optimal throughput for this project growing from 20,000 tonnes a day of ore to pad to somewhere around 80,000 tonnes a day of ore to pad. And in doing that, we should see gold production go from the nominal 100,000 ounces a year, as you've alluded to somewhere around 300,000 ounces per annum. And so that is a lot of gold to come out of one project, and it becomes a pretty interesting project at that point. We have to do an EIA again for the expansion of the project. That should be pretty straightforward, but it's a time constraint, and it'll be at least 2 years of process for an EIA. The good thing is a lot of the infrastructure components of the expansion project, like the leach pad, the waste dump, the processing plant, are all in the same footprint of the currently permitted and approved projects. So to imagine ourselves doing another EIA for the expansion of the project, that doesn't worry us too much. We also will be doing that and getting that EIA reviewed and approved in a new government, because the current Boric government, which pulled us up a couple of years back, will not be in power. It's 4 year terms in Chile, non-renewable. So we'll be facing a new government, which is likely to be pro-mining and more centrist than the Boric government started off as. So to answer your question, 3 to 5 years is probably the window we're looking at, given the fact that we have to do EIA, study, get everything ready, which will be good because we'll have 3 years of production under our belt at least by that time, which means we should have a balance sheet, a stronger balance sheet than what we have today, given a strong metal price going forward, which we all anticipate will be the case. So we'll be a different company when we come to do the expansion. That's for sure.
Yeah, absolutely. It will be quite a bit different. And the heavy lifting, to come in and do an additional permitting process after the original has been finished off here, I see is going to be certainly not as heavy of a lift, still heavy, but not as heavy as the first, in my opinion. Then also, when you guys have a proven production profile and you have history to back that up, the financiers is going to be simpler to look at here, and you guys will be obviously funding this from a mix of balance sheet, cash flows, maybe some equity and some financing as well to do the expansion. Haven't taken a look myself, Alex, to figure out if this is all funded out of cash flow. I don't think that would be the
No,
case,
I
given.
mean it'll be a mix, but I think what Wheaton Precious Metals did by backing us initially in 2021 with the stream, and now with a gold prepay facility, is that they want to be there for the expansion of this project.
Right.
So whatever the capex might be, and whatever the blend of equity, cash, whatever may need to go into it, and debt, I think we can probably be pretty confident to say that Wheaton will probably be a player in that.
Yeah, it's a good setup, and you guys are really laying the groundwork in a pretty heavy way here, right here in stage one. So I think overall that's going to work out pretty well, Alex. And then, of course, it makes sense if you guys can get the expansion going. It makes more sense from an NPV standpoint to get that expansion up and rolling as quickly as possible, given the
Yeah.
constraints. Just for the audience, and maybe for some of those evaluators out there that want to spend a little bit more time on this, I would suspect, Alex, and I know this isn't going to be the new study, but folks can go look at the technical reports, the old stuff, go back and look at the project as it was contemplated earlier on. And there are some metrics that I think people can use. They're outdated, of course, and they're historic, but would that be satisfactory for them to look at that?
Yeah, I mean, the previous pre-feasibility study that was done by the previous company back in 2014 contemplated buying water from the industrial plant that we're buying water from for the initial phases of the project and piping that up to the project. Now, that's still a potential option too. I mean, we don't have to go desal, but what we're interested in is potentially a desal option where the desal operator actually flips the capex for the construction of the pipe as well, and the processing plant or the water plant. So there are different ways of skinning the cat, but yeah, there was contemplation of in the previous study done in 2014 of a pipe being built from Copiapó to the project. The cost of that pipe, obviously, 10 years ago was different than it is today. We did a study a couple of years ago just to get some ballpark numbers on building a pipe from Copiapó to our project, and it was about $250 million at that stage. So, yeah, I mean, look, there's going to be project capex, which means expansion of the plant, the leach pad, the waste dump, etc., at the project, and then there'll be whatever capex of getting that water to the project involves. But the other thing is that what people should understand is whatever solution we settle on for our future water requirements will likely impact our neighbours, and our neighbours being Kinross, who have the adjoining La Coipa mine and also the development project called Lobo Marte to the south of us, and also Codelco, who have a large lithium brine project in the Salar de Maracunga, which is to the east of our Fenix Gold Project. So there's three significant players in that area that would require water for their projects in the future. So we would imagine that we're going to team up with Kinross and or Codelco and or both, right, in coming up with a solution and not having to flip all the capex for bringing whatever water solution we end up settling on to the project. So I hope you understand that it's not just us that'll be looking for water. There will be others looking for water.
Absolutely. I think there's going to be the good potential for some type of a partnership, both with nearby operating companies, maybe even government involvement as well, as this can be quite useful for others as well in the area there, Alex. So I appreciate you highlighting that because it does make a dent in that infrastructure capex. Now, just with respect, one other thing here, Alex, just to give the audience a little bit more flavor here in terms of additional potential at the project. Talk a little bit about the exploration potential, Alex, that's still out there. Cover off what you guys might do on exploration, once construction is done and you guys start into production and looking to replace depletion, of course. Talk a little bit about that, and as well as outside of Phoenix. Anything you could say to us at this point regarding potential pipeline building, not the water pipeline, I mean project pipeline, just for the company. What do you think about other things you guys are into potentially that you can speak of, or what your ambitions are to build a project pipeline beyond Phoenix?
Yeah, okay. Well, on the exploration side, just to be clear, we didn't discover Phoenix Gold. It was discovered by a company called Atacama Pacific back in 2010, who drilled it between 2010 and 2014 and defined 5 million ounces of gold oxide resources, which people can find outlined in our technical reports. So we haven't done any exploration on the project. So we walked into a proposition where we were presented with an existing resource and we're turning it into a mine. That's what we're good at doing. On the exploration side, what our plan is is once we get to closer to production, is that we start to look at depletion drilling and expansion drilling, I guess, of the existing resource, and that will involve pulling up a couple of rigs on the project and just drilling, 24/7, I guess, and just filling in gaps, looking at depletion, looking at extensions, et cetera, et cetera. Now, Fenix Gold, if you ask me, and I'm not a geologist, I'm a mining engineer, but if you ask me, I'd say Fenix Gold, when it's all said and done, in maybe 15 years' time, will have grown to the size of somewhere between 5 and 10 million ounces. That's my feeling, just because of the nature of the deposit, etc. That's the feeling I have, and so that will come from the drill bit if it happens, and there are plenty of down deeper targets and extension targets that we can drill at the project to keep us busy on that side of the business. Now, in respect to where we are in the Maricunga Gold Belt, there's just one producer in the Maricunga Gold Belt at the moment, and that's La Coipa, which belongs to Kinross, and ourselves very shortly when we bring on Fenix Gold. But there's at least a half a dozen other projects that are not going anywhere, but are endowed in total with over 80 million ounces of gold. So it's a very prolific gold belt in Chile, but it's underdeveloped. And the reason it's underdeveloped is because of the size of the projects. There's some big deposits there. If you look at Serra Casale Caspicha, which belongs to Barrick Newmont, we're talking about plus 20 million ounces of gold in resources. And that type of deposit, based on the sort of thinking of Barrick and Newmont, would require several billions of dollars to develop. So I think what's opportunistic for us is that once we get Fenix Gold up and running, we can walk around that backyard with some of those elephants and see if there's anything that we can do on a smaller basis to de-risk those projects. And that's something that I want to look at as Rio2. So in our backyard, there are lots of opportunities that we need to look at. And just to explain the gold business to listeners, the gold business in Chile is very small. Chile is a prolific mining country, but it's predominantly copper. And gold production in Chile last year amounted to just over 1 million ounces of gold from byproduct credits of copper mining, and also two or three mining operations gold mining operations that exist in the country, owned by Kinross and Pan American Silver. So the gold business in Chile is very small, and we're going to be a contributor to growing the gold business in Chile. There are only 4 key players in Chile at the moment in gold, and that's us, Kinross, Pan American Silver, and Gold Fields. That's the gold business in Chile. Obviously, there's a few other junior companies scurrying around looking at copper and gold and other projects, but we're the gold business in Chile. And there's lots of potential, I think, for that gold business to increase in size over the next, let's call it 5 to 20 years, right? There's a good opportunity to expand on that gold production in the country. So we're going to be a player in that. And so I can see lots of opportunities for us in the future, organically from what we've already got, and in our backyard from nearby projects.
Alex, thank you for that. And I'm sure you guys are keeping an eye on a few things out there as you guys look at the potential opportunities that lie out there, the conditions in the market, and those valuations for those potential projects that has your interest, as well as the right timing for the company to be able to maybe look at something else as well. Just with respect to single jurisdiction, Alex, would you look to venture back into Peru? There, would you look? Where else would you look if you guys were to pick another jurisdiction? What would be ideal for the company?
Oh, we'd love to do business in Peru again, but unfortunately, the opportunity hasn't come up. We've looked at a couple of things, and they just haven't worked out for us over the last few years. So yeah, Peru's great. I think we're open-minded as far as South America goes and North America. I mean, we could spread ourselves into North America quite easily if the right opportunity came up. So yeah, we're an America's based company at the moment, and yeah, we could do other things, and we're open to that. And we have been in the M&A space over the last 6 years since we acquired Fenix Gold back in 2018. We've been kicking tires on lots of things that, for various reasons, haven't turned into anything for us. But that's the nature of M&A. It's a tough business. And the other thing that I keep saying to people is that once we go through the expansion of Phoenix Gold and we get it up to about a 300,000 ounce per annum run rate, we're probably going to be a target for somebody bigger at that stage. So, we're open minded. We know how to build mines, but we also know how to exit. And I think investors need to know that that's the way we think. We think about creating value for shareholders and, taking opportunities as they get presented to us.
Alex, why don't we move to that and just discuss that briefly, because that's something I wanted to talk to you about anyway, was just that overall strategy and where you'd like to see this company be in 3, 4, 5 years' time, and obviously what your preferred outcome is for the company as far as being an operation company that has cash flows, which is certainly desired from a number of folks out there, and something that you guys have done. And then, of course, that eventual buyout of the company. For me, I think that if stage one goes as planned and the company gets to that point, I mean, that right there is very telling for a potential buyout if the valuation is proper and you guys can accept that. But then also demonstrating the additional expansion and upside of this project through the drill bit and through that expansion towards that 300,000 ounce of gold per year mark would also be a further value add. And obviously, people would be paying up even more for that. So I think really for us, this is a target. In some cases, it's a target now. It's definitely a target upon 100,000 ounces per year steady state, and then further down the road. Tell us what your ideal outcome would be at this point, Alex, as far as your desire to continue being an operator, or you're moving into operator status. Would you want to continue to be an operator, Alex, as far as your personal liking to stay on board with the company and continue to lead that operation along with the CEO? Or do you guys see that, hey, if the right buyout offer comes along at any point, we'll take that and move on?
We are happy to build the company up and to expand the project, as I previously mentioned, do it all ourselves. We've got the personnel, we've got the capability. We'd be happy enough to do that, but we're realists as well. Here we are, we're sitting here with this 5 million ounce deposit in Chile that's in initial construction. Our market value is 250 million US. The MPV of the starter project, which we're building right now, at today's gold price is about 800 million US. So there's a lot of value catch up that we have to do in respect to the value of our company. We will do that. I mean, we built Rio Alto back in, when we started in 2009. It was a $12 million company. We acquired La Arena from IM Gold back then. We got the La Arena into production. We got it up to a 220,000 ounce per annum run rate. We built the value of the company up to about $600 million at that stage. In 2013-14, the gold price came off a bit, and we decided to do another deal in 2014. We acquired Sullivan for their Shahuindo project, which is about 50 kilometres in a straight line from La Arena. We were the logical buyers for that project. When we did the deal with Sullivan, we were a $300 million company at that stage. They were a $300 million company. So we did a 50-50 deal. Pro forma, it was 600 million. By the time we closed the transaction 3 months later after announcing it, we were a $900 million company. And this was in a bad gold market. Gold price was coming off at that stage. This is 2014. So the market loved the story, gave us the value, and then all of a sudden, a company called Tahoe Resources comes along and offers us $1.2, $1.3 billion for the whole lot. And we looked at each other and said, yeah, we should do that. That was the playbook then, and I think it's a similar playbook now, is we need to get the value up. I think if you look at peers in our sector, the G Minings, the Orlas, and we're not there yet. I mean, we're at the beginning stages of those companies, the Artemises, etc. All got plus $2 billion valuations, and here we are on a Canadian, and that's Canadian dollars. Here we are on a Canadian basis, just over 300 million. So we've got a lot of catch up to do, and we'll do that by executing and delivering. But all I'm saying to our shareholders is that we're open-minded, and if somebody comes along with a checkbook, it's not going to be because Alex Black wants to retire. It's going to be because it's a good deal. It makes a lot of sense to do whatever the deal is at that time, and that's exactly how we will execute. So no, this is not a personal thing. This is not what Alex Black or Andrew Cox, who's our president and CEO, wants to do. It's what's good for the company and for the shareholders at the end of the day. That's how we'll play this out.
And absolutely that would be the case, and wouldn't expect anything less from you along the sense of, how much time do you want to spend in the sector? And obviously you're a key piece. Andrew's a key piece. The team's all key parts to this, and to not have you around is not good either. And so just trying to sort out your commitment to
Some
staying
people
on.
might be a great thing.
Yeah, I'm sure there's a handful of shareholders out. Get Alex out of there. Yeah.
But I think, once you commit to this business, this sector and this business, you got to be in it for the long haul. Now, obviously, I'm no spring chicken, so I'm not going to be around forever. But that's something that we as a business need to take into consideration as succession planning, et cetera, et cetera. But because nothing goes on forever. But all I can tell you is that we've got a very focused strategy to build and create value for our shareholders. The value that hasn't come to our share price and to our valuation yet. It'll
Right.
come. It'll come.
Yep. I think you're willing to be in this for at least another 5 to 7 years, and you're no spring chicken, but you're
And
not
plus, I enjoy
terribly
it.
old either.
I mean, we went through a lot of crap over the last 2.5 years, but even that has fired me up to really get stuck into this and make a good go of it, because we went through a lot of pain there.
Right.
So yeah, the whole team's focused, and we're all enjoying what we're doing. That's the key part of any business anywhere in the world. And we're gonna create employment. We're going to be a big contributor to the Atacama region and to the town of Copiapó, and that's something that we like to do, is to create things for other people.
Right. We can't please everybody either. And I think you've realized that in your career. I've realized that in different ways over here on our end as well at SmithWeekly is, we're not able to please everybody. We're able to please a lot of people, but not everybody for sure. And people come and go at different times. And that timing also impacts what kind of note they might leave on if they do decide to exit whatever they're into, whether it's an investment or what have you. And obviously things are very choppy in this sector, and sentiment's been pretty terrible over the last couple of years. And so it's been a tough road to hoe. On the comments of the community work, I wanted to just touch briefly on that, Alex. Of course, you guys will be wrapping up these efforts as well as you guys get into cash flow state. I always like to remind the audience that, of course, when it comes to things like community and CSR and ESG, if you want to use that acronym, the bottom line of it is these things aren't really that possible unless you have capital to do those things. It's very difficult to have any type of program without the first capital being there to do so. But Alex, as you guys get bigger, you guys get into cash flow, you guys will be wrapping up additional efforts on that front. You guys did put out a CSR ESG report back in August. On that general subject, any comments on the community front, highlights that you want to mention, and then also government relations, and really what the company is doing to help educate people, both in government and in community, about the importance of responsible mineral extraction?
From the point of view of community, We've been in a very strong position. When we took on this asset back in 2018, the first thing we did was focus on community. And there is a community group called the Koya that dominate that region of Chile. And in our case, we have 6 sub communities of the Koya that we have community agreements in place with, and we've had those agreements in place for years, not just recently. They've been in place for 2.5 years before we got held up on the EIA, and that's a big part of the EIA process. You've got to get your community agreements in place and present them as part of your evaluation of your EIA. So we had the communities behind us during the hold up that we went through. They were part of the lobby to the government about wanting our project to go ahead because they obviously benefit from that happening. So we have very good relationships with the communities involved. We also have very good relationships with the local business in the Copiapó region. They also were part of the lobby for us during our hold up of our EIA, and were a positive contributor to that. From a government perspective, I think the government, they actually admitted the fact that they had done something wrong in holding up our project. I mean, that they had not fulfilled, the letter of the law to the process of the EIA handling our EIA approval process. But unfortunately, with government, the government's going to change, and I mean, the Boric government's going to be done in a year and a bit's time, and then there'll be a new government, and then we're going to have to deal with new people and new regulators, etc. So that's an ongoing process. We think they learnt something from what happened to us in this current government, but we also will be very proactive because of the expansion of the project in messaging, what we're trying to do, what we went through, and what we're planning to do for the future with the regulators as they change with the new government when it comes into power. It's an ongoing process, both communities and government. As I say, governments cannot mandate mining. It really starts at the social side, at the community side. Unless you've got community support, governments can say they're pro mining or whatever, but unless you've got support at the community level, you're not going to get a mine built. We're very conscious of that. We've got a great community and social team in our company, both in Chile and also in Peru, overseeing what we're doing in Chile. And yeah, so that's our situation at the local level.
Alex, thank you for that. It's always good to hear on these issues as well, and some of the thoughts you have, of course, on the matters, and then also what you guys are doing out there. So excited to see the continued work there. And I know you guys have been working with the community for ever since you showed up there. And so I know the relationships are quite good, and the government also seems to be coming along with letting you guys come in here and get this project going based on where we are with permitting. So Alex, just with any other thoughts here on the company, I'll leave you with this final question, plus any comments you have to add. For potential investors who are listening in, the company has a market capitalization of about 280 million Canadian dollars at this point. Why should Rio2 be considered within the institutional, family office, and retail investors portfolio at this stage?
I think because of the, simple comparison that people can do in respect to other developers and other near-term producers or recent producers, and our valuation in respect to those. So I think, and also the validation for that point is the fact that we had 48 new, not existing, but 48 new institutions come into our financing. That is an important aspect, which means that there are institutional investors looking at a company like us as an opportunity for growth and value growth.
And for interested investors and for other interested parties, what is the best way for them to contact the company?
I'm happy for people to contact me directly. My email address is alex.black@rio2.com. Very simple. Happy to take questions from people. I always respond by email. And if necessary, happy to have a call as well. Open book to anybody, and so is the rest of our team. That's the easiest way. Just watch our progress is all I can say to listeners. And this business is all about execution and delivery, and it's all about delivering, as you say, and hopefully you'll be able to witness that with Rio2.
Alex, appreciate that. It's always good to catch up with you. We should probably do it more often. Keep up the good work here over the next few months. We're looking forward to seeing the progress. And of course, looking forward to hearing back from you again on the podcast in the coming months.
Thanks, Andrew.